What's up, everybody? Welcome to the January 26, 2026 IndiView Weekly Market Update. I'm Jeremy Bryan, and this is powered by Indy Wealth. Today, we're going to get right into those hot button issues that are going on in the markets. So let's just get started. One, we're going to talk about economic trends. Overall, we're still holding in. If you just look and take a step back and look at all the kind of broader indices about the things that show growth or contraction in our economy, whether that's manufacturing indices, service indices, GDP estimates, and also jobs growth. All four of those right now aren't showing anything that I would consider inflecting negatively. In fact, they're probably equal to slightly better than they've been in the past couple of months. So if you look just at, indices around growth, both manufacturing and services, they're in growth territory. They're not massively in growth territory, but they're not in contraction territory at this point either. If you look at GDP consensus estimates, those are rising and actually pretty high and still above average overall, even after an above average Q4 number. Lastly, the components of jobs are really what's interesting to me is that if you look at real-time data, we've been largely saying a lot that we're in that low hire, low fire environment. And I think low fire has been kind of continuing, but low hire, we're starting to see some very, very, very early indications that maybe there's some hiring trajectory coming back up. There's a lot of indications that are trying to get more real-time data out there, whether that's weekly claims, continuing claims, or Indeed has a jobs posting type of thing, just to get a sense of what's more of the real time going on in the job market. And you're starting to see some blips upward in that from a perspective of getting healthier, not getting worse. Now, again, that can just jump here from time to time. Again, this is extraordinarily early to call it a trend, but we are seeing, but what the trend is that I am seeing is that I don't think it's getting materially worse at this point right now. And for those of you who have listened to us, we talk a lot about jobs and job sentiment as drivers of the overall economy. We know they're kind of coincident indicators, maybe even lagging indicators as considered by economists. But job sentiment to us is very important. If people think that they can get a job or replace the job that they have right now, they will continue to spend money. That's our theory. It's very simple, but I think it works over longer periods of time. And our economy runs on what we spend. And so what we're seeing, again, from the data does not seem to be getting materially worse, but the sentiment data has remained pretty negative overall. And I think a lot of that is due to the political environment that we're in right now. And then secondarily, that K-shaped economy that we've talked about a lot here, among that median to upper tier household, whether that's income or whether that's net worth, a lot of them are invested in markets, and markets are doing very, very well. Whether that's stocks, whether that's bonds, whether that's alternatives, most of that stuff is doing pretty well. There's a few pockets where it's not working so hot, but for the most part, people's values in that, if you have investments, their values are rising. And so it creates a wealth effect and saying on paper, I'm richer, so I can continue to spend money. It's less effective at the lower tier, from that median to lower income threshold, that is much more concerned about jobs to create jobs and affordability is really the most central components to them. Jobs around, hey, that's how I pay my bills is, I get a check and I pay the bills, and whatever I have left over, we do hopefully some fun stuff with it. Hopefully we save a little, that kind of stuff. But then we rinse and repeat on that. And then secondarily, they're also affected greatly by affordability. So whether that's affordability around the core inflation stuff, or whether that's food and energy, which gets taken out of core inflation, but is dramatically important to them. And also something like electricity costs right now. We're having this massive cold snap in the United States, and electricity costs are rising as a result. And they were rising before, and they're feeling the pain of those kinds of things. So I think that's where consumer sentiment data is coming from, is again, that dichotomy between the two of them, and then also an administrative and political environment that is rife with volatility right now. So again, I'm a bigger advocate of following what they do versus what they say. But I think this can't be a permanent structure, right? I don't think it stays this way, is that if this consumer is dour overall, I think eventually it does work its way through, or subsequently the other way around, is that the economic growth continues to hum along to where the sentiment starts to improve as a result of other conditions, or just easing of some of the volatility that's out there. We'll see which one ends up happening, but from an economic trends perspective right now, things are not getting materially worse. Turning to number 2 is silver and gold continue to rise. I'll be completely honest, they've risen much faster and much greater to a degree than I had anticipated. We have held a component of gold in our portfolios through this entire period, but we've been rebalancing periodically. We've been bringing that back, taking some profit off, bringing it back. That has not been the right strategy if you really wanted to maximize your profit here right now, because both of those assets, silver and gold, have just continued to rise at an accelerated pace. And so from our perspective here, we're going to continue to advocate for rationalization here, because especially among silver, this is somewhat unprecedented. I don't believe we've seen this level of acceleration in that market, certainly over the last 20 to 25 years. And I would suggest probably even longer than that we've seen this amount of performance in this short a period of time for that precious metal. A lot of reasons are given for that. I think US dollar weakness is probably the predominant reason given, but also a supply-demand imbalance for silver. Could this continue? Sure. In the short term, I would not be putting that as my base case scenario, that we continue at this level. It doesn't have to collapse to where it was before. But I do see an area where I would be advocating and continuing to advocate for not letting this be a large component of your portfolio. Don't accelerate the gas pedal right now, right? Is that if you've owned it right now, enjoy the fact that you've owned it and rebalance that. You don't have to sell it all, but I would rebalance that into other assets that maybe haven't worked as well, because these tend to be very volatile. They don't throw off any cash flow. They don't give you a dividend. They don't give you, it's just what the next person will pay for it. And so if that sentiment shifts, that sentiment can shift very, very fast. And a lot of the profits that you've achieved in gold and silver can be eradicated relatively quickly. So just understand that. And if you own a position in there, understand where you are and what your comfort level is, and maybe take some profits from some of the extra that you've seen from the performance lately. Turning to number 3 is earnings. You can see 103 companies reporting this week. 103 of the S&P 500 is reporting this week. So we're going to learn a lot more from at the end of the week than we know right now. What we know right now is earnings have held up pretty well. So we were talking in our market update and outlook piece about January is often where we start to see the inflection point downward of 2026 earnings estimates. Right now, we're estimating earnings growth of 15% in 2026. I expected and I thought that we would maybe see that start to come down. Didn't know to what degree, but it's pretty common in January that companies start to talk more conservatively and sell side estimates start to follow along with that. And I often said too, is that if it falls to 13, 12, 11, nobody's really going to care that much. If it starts to fall from 15 to 5, then we got a problem. So we'll see where that shakes out. We have not seen that yet. So we've had companies reporting. What I would say is, again, this week is bulk, because not only do you have 103 companies reporting, you also have the Mag 7 starting to report. You can see 4 of them are reporting this week. And why that's important is, again, if you take the Mag 7 or you take the top 10 of the S&P 500, right now it's very, very concentrated. So these companies comprise a significant portion of the overall S&P 500. But not only are they big as a percentage of the S&P 500, their earnings growth is also a big part of the overall earnings growth pie. So you have to understand that these companies have an outsized impact, not only just because they're so big, but because their earnings growth are the drivers of the drivers of S&P earnings overall, or a big component of it at least. So depending on what they say, if they say things are getting better and they're accelerating their outlooks and everything's hunky-dory, we could see an acceleration of that 15%. I don't see that as likely, but it's possible. What I see as more likely is them at least acknowledging the fact that CapEx spending is continuing to rise, and that, some of the costs that are associated with that may have a little bit of a hampering on their earnings profile. Again, being conservative so they can beat later on down the road. I think that's what you'll see a little bit more here. I think that's our base case scenario. We'll see if I'm wrong. I'm going to watch very intently this week to see what that trajectory looks like and what the overall earnings growth looks like in the next couple of weeks, to see if I was right about that transition downward, or if there's something different right now to where we can not only continue to grow at this pace, but also maybe even accelerate going forward. So stay tuned there. Lastly, number 4, if you all have followed us here at Indie Wealth, we do what's called Cool People Good Work on a monthly basis, where we just try to highlight something either in our community or just something we saw generally of cool people doing cool things in their community. That's really what we wanted to highlight there. We do it usually on a written monthly basis. We do one piece per month on that. But I think right now, you all know Minneapolis is my hometown. I grew up northeast Minneapolis. I live 20 minutes outside of Minneapolis now. I'm not moving. I like it here. I think it's a great place to live, and I think it's a great place to raise kids, and I'll continue to live here. So what we want to do, given the horrendous state of our state right now, is just really highlight some of the people doing cool things. We really want to highlight some of the people in our community doing cool things. And one of the ones I just wanted to talk about was Pow Wow Grounds. Pow Wow Grounds is basically in South Minneapolis. They are at the epicenter of where things are happening right now. And they're really doing the best they can. They've been in their community. It's a highly indigenous community right there. The Native American population is pretty concentrated in that area. And they've been a staple of that community for a long period of time. And that community is struggling too. It's not just, the immigrant community. It is a lot of people are feeling strain, certainly, fear, certainly, and those kinds of things. And Pow Wow Grounds is really trying to help, not only being kind of that continued staple in their community, but also through support and having, donations where needed. They've provided soup, they've provided hot coffee, they've provided things to just try to make life bearable in an area that is pretty close to unbearable at this point right now. So I just wanted to highlight them and show that there are helpers in the community. There are people doing good work. Pow Wow Grounds is certainly one of them. And we hope that you could help them as well, if at all possible. So with that said, that is the end of our IndiView update. Tune in next week where we'll have our next hot button topics. Until then, thank you very much and take care.